Is the stock market going to crash or is it going to go up going into next week's trading week? Is the FOMC meeting going to affect the stock market? You guys, Eric back here with Photos Trading Academy. Thank you yet again for tuning into another video of mine. If you haven't already yet, please click that subscribe button, like this video. You guys, I would really like to hear your feedback in the comments section. I really want to know your guys' thoughts on going into next week's trading week. And let's get right into it. This is going to be a very, very important week. And currently, we have to understand the outcome. I always express this very personally, especially when it comes to the stock market, guys. We have to understand the outcome. Okay. The FOMC meeting, if it's a positive, if it's a positive meeting, it's going to react well. If it's negative, it's obviously not going to react well. The stock market tends to move drastically just minutes before the meeting on Tuesday or Wednesday. I'm not sure what day exactly it's going to be. I believe it's going to be Wednesday. But again, the reaction up until the FOMC meeting, it's going to be very volatile, you guys. And we've literally have traded these weeks multiple times prior to the FOMC meeting, and we see exactly how the market reacts. But more importantly, we need to focus on what is going to present us, which is tomorrow's trading day. Now, again, you guys, these are simple things that I look into when it comes to the stock market. If you cannot wrap your mind around where and how to figure out certain patterns and price action in the stock market, I'm telling you, you are going to struggle as a trader. Now, typically, what I like to do before anything, I want to clear my charts. That's number one. Okay. Alongside, I am trading gold. I think I did short gold. I did short gold actually. Exactly, I did. On Friday, I ended up swinging gold puts, GLD. So I'm watching futures on gold, and I'm also watching futures on /ES, which is very equivalent to the S&P 500. But anyways, let's not get distracted. So what am I going to see going into next week's trading? Where's my daily? Okay. Let's do this to make life so much easier. So going into next week's trading week is going to be a very important week, you guys. I said that. And we have to make sure we react to the market of what and how it presents us. Okay, so we are still in our channel, of course. When it comes to trading, you guys, we have to understand where support and resistances align. Like if you can't draw out your simple support and resistances, you guys, I'm telling you, you're not going to be able to trade successfully. I mean, you could almost get away of just trading in between these channels, right? And you don't even have to trade every day, honestly. If you would have traded in between these channels, you would have shorted SPY up here, would have went long on here. I mean, there's so much opportunity when it comes to trading in the stock market. Now, guys, we have to take this into consideration. The CCI #1 indicator that I use when it comes to the daily time frame, it has officially curled towards the downside. Now, a lot of times what I like to tell my students and members, when you're trading, you guys, you have to look at the overall extension. Now, you guys, we came up. I always tell everybody how to trade the CCI. If it does go above 150, we want to look to short. Above 150, we want to look to short. And exactly how I caught this day, guys, I'm not over exaggerating either. I made 3,000%, 2850, 2,850% on these consecutive 3-day drops. And I sold somewhere around the bottom here, playing same week expiration. I ended up shorting SPY. Literally on this day, I got into swings for puts. And it's the same exact thing. We could be seeing a consolidation phase, maybe up until Tuesday or Wednesday, followed by a drastic drop. We don't know exactly, but what I can tell you, and it's exactly how I legitimately tell all my members, okay? When we're watching indicators, it's a help. right? So this actually justifies my position because the last time we went above the 150 mark on the CCI, right, above 150, it came up to about 187, right? This came to about 181. Now we're crossing back down. We ended up shorting it, right? And I'm not saying this is going to exactly be, as what I'm saying, but it's overextended, right? So if we end up crossing the top third line towards the downside, this is going to be a good look for the shorts to come in and start selling off hard. Okay, guys. Now, obviously, we see whatever the 9 crossing the 21. This is irrelevant, you guys. These two indicators, don't even pay close attention to this. This is completely irrelevant. We're currently in a downtrend. I mean, we could see a stronger sell-off, you guys. I mean, MACD is still not caught up to it. Stochastic slow is probably as close as what you're going to get to the CCI. But the CCI just gives you more of a clarification and better just understanding of where the actual market is going to be moving into, especially if you know how to use it. So, number one sign of a bearish movement is going to be the CCI. Alongside with the volume, it finished off Friday a little bit higher than Thursday. Right here being green and red, that's a sign of bearish momentum. Of the volume, I would see where it would actually align once, if it does end up higher. This is kind of like medium-sized volume. Like if there was a spike in volume on Monday, like and it finished off above here, then I would probably look to see where I'm going to play it towards whatever side, right? Depending if it finishes bullish or bearish. Now, I'm not saying it's going to be 100% we're going to drop, right? But can we absolutely drop to 390? Yes, we could drop to that 390 range. It's absolutely possible. And that's why you cannot be one-sided in the market. This is a very important thing I'm going to tell you guys. You can't be one-sided, because if you are, then you are going to lose money, guys. This is just as simple as it gets. If you want to play this market right, you need to understand what and where the direction of the market is moving into. And the best you can do is off of probability, right? Trend lines, right? Price action. You see where the hardest resistance is. I mean, did we fill this gap necessarily? Not quite, but do we have to fill it? No. It's not mandatory that we fill this gap, right? It doesn't, I mean, it filled it probably 90%, but it can still fake us out and drop back down and then fill it maybe later in the week or after the FOMC meeting. Who knows? It doesn't matter. And you guys, one thing I really want to tell you, if you're going to play the FOMC meeting, just remember, it is a gamble, and just understand the outcome. The outcome can potentially be a full loss, or the outcome can be unlimited to your gains. But it's how you obviously pursue the market. It's if you look at it as like, oh my God, well, I'm going to be bullish this week because the FOMC meeting is going to be, great. Whatever his name is, Jerome Powell or whatever. He's very positive on the stock market. Who gives a shit if he's freaking like, printing trillions of dollars? I don't care, man. I don't care if he's the most positive. I don't care if he says our economy is the strongest it's ever been. You guys, it's probably still going to be bearish. Remember, market isn't here to make you money. It's all manipulation. So you have to be the one that manipulates the market. Now, I'm not saying it's going to be 100% if he's positive and if he's strong on the economy. Yeah, it's probably going to push up the market. But guess what's going to happen, right? He's going to be very, very bullish on the market, Jerome Powell, and he's going to speak about it or whatever he's going to speak about. The market's going to shoot up maybe 1,000 points that day, like ridiculously high. And then the next day, it's going to be followed by a massive drop. Like, why is that? It's because manipulation, guys. Remember, the market isn't there to make you money. It's there to make you lose money. So you have to be the one that manipulates the market, guys, at the end of the day. So going into here, you guys, I set my fib levels. This is always going to be the number 1, 2. So I'm always going to look at the indicators and see, hey, where's momentum of direction heading, right? Where is it showing strong strength? Now, of course, I have a lot of other stuff that I use to dictate my direction in the market, and of course that is going to be in my VIP purchase section down below. If you guys haven't already yet, be sure to visit the link down below, you guys. Come and join the VIP group. I'm telling you, it's well worth it. I'll make you money. The stuff that I'll teach you will make you money. If you understand how to pursue it, you will definitely make money in the long term. Now, once I have this set, I like to go to the 5-minute chart and I want to see the levels. So we happily, had a rejection up here, which is obviously normal, completely normal. We're looking, for probably a stronger suit towards the downside. The market has overall dropped significantly from 400 range all the way down to the 393. Guys, that's a $7 move. We're probably going to be looking at going into next week for another $7 drop. Now, my predictions is going to stand as is, right? If we drop below this 393, we're going to drop to 388. Now, if we do end up pre-market around this section right here, around this area, we're going to look to take the rejection right at 393 for a bigger drop to 388, right? Because we always want to buy at the top peak high and not, be one-sided in the market and try to short it if it presents us an opportunity, right? If it's bearish momentum, it will most likely carry the bearish momentum to this level. And then so on and so forth to 385. Now, one thing I really like to do, you guys, especially if I'm trying to figure out where support and resistance levels are, I will use the 4-hour chart. And I want to see where, these rejection areas are. So what do we notice here? I already noticed one big major factor, you guys. Let's see if you guys can notice it. So we notice a big support level right here, you guys. This 390, 155 is major support level because of where it's tested here, bounce, tested here, bounce, tested here, bounce, right? But also keep in mind, we have a major support level at 393 because look, bounce, 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 right? 1, 2, 3, 4, 5 times, okay? So more than likely, we are going to see probably a fall through in the stock market below 393, headed down to 391, okay, followed by a bigger bounce. Now, also notice this support level, right? We have a support level right there, okay, 390. 391 breaks through, it's going to go down to 390, right? Probably 391. 391, I mean, we can really put this just as a support level, just use this 391. But we want to make sure we have these two levels in because these are where the last wicks finished on these last two 4-hour of the days. So that's going to be a major crucial support right there. 389 could be one too. I'm not going to mark that because this is going to be a psych level right here, 388.90. We could drop down even further, but right now I'm just looking for where I can make a $3-4 move on SPY. That'll give us 300-400%. Maybe 200 or 300, not 3 or 4, but 200 or 300%, depending on how it looks. Now, you guys, overall movement, where's the trend moving into? I mean, we have to make sure we look at this, right? We're already, this is a good sign, you guys. We're already below the trend, right? So we're below this overall, what's called, if anybody knows, and if you are a group member of mine, you should know this because I've taught you guys this millions of times, right? What is this? This is called a what? A rising wedge. Yes. So rising wedges is always an indication for a bigger drop, right? Wedge, 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 rise, 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 and then it finally gets exhausted and then it starts dropping below. So this is an indication for a drop coming. Now, I'm not saying it could happen, right? But it has a higher probability of it happening, right? So we could see a bigger drop, maybe down to here, maybe down to here, right? We could see these drops take place. This is going to be a support because of here, right? We have this support tested right here, dropped, right here, support, resistance. If it is below, it is, but right now it's support. So it dropped here, dropped here, dropped here, and then it tanked here, right? That was a major crucial level of support right there. So we could see a drop maybe down to 388. I wouldn't be surprised. I really wouldn't be surprised, you guys, mixed with this falling wedge. Now, again, this is going to be my thoughts on the market next week. Obviously, I'm going to be watching a lot of other stocks, like maybe Microsoft and a bunch of other stuff. And again, I'm going to do some chart analysis on this. I already noticed so much on Microsoft right here. that just based off looking at it, you guys, we have a falling or rising wedge right here, right? We have pinpoint of a falling, sorry, I keep saying falling, rising wedge, right? Rising wedge closing up. We can see this as a potential move towards the downside, and you know, I'm gonna close this up just a little bit because I want to really touch these. I'm gonna touch these 3 wicks right there. 1, 2, 3, 4, right here along this side. So that's gonna be a good, nice little falling wedge right there. Or sorry, rising wedge. God, I keep saying falling damn wedge. Irritating. So yeah, we got a falling wedge. Dude, I did it again. Are you serious? We got a rising wedge that could be followed for a bigger drop in the stock or on Microsoft. MACD kind of crossed towards the downside, right? Just crossed over, so we could see a bigger fall in Microsoft off this rising wedge. If I keep saying falling wedge, I'm gonna throw my computer. I swear. I know I didn't say it that time, but man, I legitimately said it like a million times. So yeah, so going into next week's trading week, Microsoft could be a nice little short too, towards the downside. It could fall for earnings if it does consolidate around this area. I mean, I have no, I really have no idea what it's going to do for earnings, but you guys, it could fall. It could fall hard just to break this rising wedge. So anyways, guys, I hope this video helped some of you guys out. I hope this kind of puts some clarity to your guys' minds and seeing how you guys are going to approach the market. This is exactly how I'm going to approach it. And again, you guys, we're below the rising wedge on SPY, right? We're below it. So we could test back up here easily and then fall even harder, right? We can test right on this trend line. No one says you can't test these trend lines. Trust me, they test millions of times because guess what? I use this for my 1 minute strategy. And they usually break slightly and then they come back, test it, and then they just fall extremely hard. So we could see a pop in the market. We may not. We may see this may be, you know, the ends of all, and it can drop going into tomorrow's trading day or even Tuesday after the FOMC meeting, Tuesday or Wednesday, whatever day it is. But guys, I hope this video helped some of you guys out. I'm gonna call it to an end on this. Be sure to like this and subscribe to my YouTube channel if you guys want to see more content. And please, you guys, leave some comments down below. I really want to know your guys' opinions on it. I mean, I'm using one brain right now. I'm using my analysis, my thoughts on what's going to happen next week. I really want to actually see and know what your guys' thoughts are on going into next week's trading week. If you guys are bullish or bearish and how you guys are looking at the market. I mean, at least this is how I'm looking at it. So I want to see what your guys' opinions are. And again, you guys, I will see you guys in the next video.